Mr. Larkala, VP Sun Group, Mr. Anjani Bansal, Private Sector Partnerships Lead at Bill and Melinda Gates Foundation, Mr. Nakul Saxena, Head Fund Strategy and Investor Relations at Let's Venture. Also, my honor to introduce our virtual panelists with us today. We have Mr. B.V. Naidu, founder, startup Exceed Ventures and former director, STPI, and Sri Mohandas Pai, co-founder and chairman, 314 Capital, Adin Capital, and Manipal Group Global Education. Welcome, sirs, and later, Chief Executive Officer, MeitY Startup Hub, Mr. Jitendra Vijay.
Thank you, Taina. Thank you to all the panelists for being here today. And special thanks to Mohandas Pai, sir, for making time from your busy schedule to be here. And same for Naidu, sir, for being available with us virtually today. As we discussed in our first panel, the role of government in strengthening our ecosystem. But I think one of the key questions that was raised is, where does government's intervention stop and where does the private sector jump in? And everyone has a need. Ultimately, it's about the funding. Prior to funding, of course, you need the market, you need incubation support, mentoring, and all that. But funding is a critical element for scaling. Now, how do we actually build a startup funding ecosystem in India? The domestic capital, the rupee capital that we keep talking about. And so I would like to start with Pai sir to talk about his views and visions in terms of building a domestic, robust investment ecosystem where the risk capital can be procured and deployed in the highly innovative startup. Sir, so can you please share your views?
Yeah, thank you very much for inviting me. Let me explain.
So you're on mute, we can't hear. Yeah.
Yeah, can you hear me now?
Yes, sir.
Thank you for inviting me. Let me explain the scale of the problem. From 2014, December 2020, India got $70 billion of capital being invested into startups. This year, we already have $30 billion invested into startups. This year, we have already got 41 unicorns coming up. We'll end it maybe 45 unicorns by December. And we do believe from 1st January 2022 to 31st December 2025, we will get another 120 to maybe $170 billion of capital. Means between January 1, 2021 to December 2025, we could get 150 to $200 billion of capital. But the sad news is only 10% of the capital is Indian money. The question we have to ask is, why is Indian money not coming in? And there are multiple reasons which government has to really address. We have been talking to government and they've not been addressing it. And if they don't address it, India is going to become a digital colony by 2025, when we'll have 200 unicorns. And the great majority of unicorns will have more foreign investment than Indian capital in them, because Indians are not investing. Why are Indians not investing? First, there's a tax issue. If you invest in the stock market for listed stocks, and the listed stocks are very liquid, you can buy and sell any point of time, and the tax rate is only 10% plus surcharge. If you invest in unlisted stock like startups, after 2 years, you have to pay 20% tax plus a 37% surcharge, making it 28% on the gains. If your income is about 5 crores in terms of taxable income. So the tax policy is against Indians Indians investing in startups. And for a foreigner to invest in startups is only 10%, but for an Indian, because they happen to be residents in this country, it is 28%. The tax rate is too high. And I think we have told the government many times, and it's just not working. And I hope the Digital India team will take it up strongly, because it's a very, very serious issue. The second important thing which is important is our institutional investors who got large balance sheets are not investing in this area for various reasons. For example, LIC has got a balance sheet of 50 lakh crores. 50 lakh crores. That's a lot of money. The other insurance companies have got another 10 lakh crores. A lot of money. LIC has hardly put any money into startups. Why? They say it is risky, we don't understand, etc. Now you have foreign pension funds like Canadian Pension Fund, Ottawa Pension Fund, who have invested more than $10 billion into the sector. You have people like Temasek and GIC who put in money into the sector. Foreign investors take the currency risk, where the Indian currency could depreciate. then take the investment risk and still invest and make money. Why can't LIC do that? There were some regulations from IRDA. We have spoken to IRDA. IRDA has eased the regulation, but still some regulations remain which have to be eased. I think Dr. Garg has been very useful along with the DPI team making it happen, but that has to happen. And our big banks had large NPAs and they could not invest. Now they got capital. Even if they put a little bit of money, they'll be fine. For example, if LIC out of 50 lakh crores put 1%, 50,000 crores, and they get 7.5 lakh crores of inflow every year, net 5 lakh crores, they put 2%, 10,000 crores a year, that'll be a lot of money coming in. And that, so the institutional investments in India is just not there. And that's very, very sad because in every country, you have institutions making up the majority of investment. For example, the US pension fund and endowments are major investors in venture capital in the United States. And the third big thing is many of the state governments have promised to set up seed funds. Now, seed funds are something that government should set up for development purposes. Why can't government in every state set up a 200 crore seed fund to give seed capital to people? For example, in the state of Karnataka, we have a program called Elevate, which Mr. Naidu will talk about. Under Elevate, we invite the top 100 startups to come and to pitch. And for everybody who is the top 100, they give 50 lakhs as a grant for marketing and they're developing the system. But why can't government set up seed funds to invest in, let us say, platforms like Less Venture, where they can say, for any company which is going and raising seed capital to a platform like Less Venture, if they raise money, they will give 20% of the capital subject to a maximum of 5 crores. So we can proliferate a lot of seed capital for startups. Because look, in Bangalore, startups can get seed capital. In Bangalore, we invest about $15-16 billion every year. This year, $15 to $16 billion. Last year, $6 billion. So there's a lot of venture capitalists, 450 venture capital funds. Bangalore has about 45 unicorns, etc. But where will you get money in Patna? Where will you get money in Lucknow? Where will you get money in Bhubaneswar? So governments have to do it as a development activity and do it much better. Then we have the SIDBI's fund of funds of 10,000 crores. But sadly, the government has not kept its commitment to fund them every year. Every year to run about. There's a backlog of funds that invest in. We helped from iSpeed to set it up about 6 years ago. And government readily agreed, but they have to give money there. And that's been a very, very positive move. They have probably created 150, 200 funds in this country. And the commitments are very large, but money has to be released. So the funding problem is very simple. We have banned tax laws, which are inhibiting investment because people need to be incentivized. And if you write off your investment against thing, it's very difficult to get a tax write-off. You still have that angel tax issue, which is still there. The litigation is not over. So people are very afraid. The regulations are not there. You have big institutions that are just not investing. I don't know why they want to give loans to other companies and lose money. And if you look at the track record, you'll find out. And lastly, we need more action from every state government, from MeitY. I've been talking to Dr. Garg for setting up a software product fund for the last 1.5 years. Dr. Garg has tried very hard. It has to go to the government. And let me give you some data. Government of India's budget is 30 lakh crores a year. The states spend 35 lakh crores. That is 65 lakh crores a year is spent in this country. 65 lakh crores. Out of which development expenditure could be 35 lakh crores. Why can't they all put in 10,000 crores to fund startups to create jobs? Startups are creating 5 to 6 lakh jobs a year. We have to create jobs in Bihar. We have to create jobs in West Bengal. We have to create jobs in Madhya Pradesh. We have to create jobs in Kerala. For that, some activity has to be done. And I think these are the major challenges. I hope all of you will take it up with government and solve this issue in MeitY, because I think this is very, very critical. I'll only end by saying we have been working in the technology sector for the last maybe 30 years. We don't want to see India as a digital colony, where most of all our unicorns are owned largely by foreigners. Foreigners are welcome. They come to invest. We all like them. They got money, but we want Indian capital. And without Indian capital, what kind of a future we have? The situation is very grave, and I'll stop here. Thank you very much.
Thank you, sir. You are truly an inspiration and an aspiration for more or less pretty much everybody who wants to be an entrepreneur and an investor. and the thought process that you bring to the table. MeitY is always grateful to you for your engagement and your willingness to guide us and support us. And with your guidance, we have proposed that digital software product development fund. We have taken your input and guidance on electronic development fund and other initiatives. And I think ultimately, aside from coming up with schemes, we need to unleash the power of Indian capital as you speak, sir. So definitely, there's a whole host of things that the government of India needs to do to enable wider policy reforms and practices and opening of the regulations. But let me ask, initially I was thinking I'll start with, angel investing and then all that small capital money. But since we are going top down, so let me start by asking Mr. Krupashankar at NIF, right? So you are a fund of fund that we are looking at. Now, as a fund of fund, you don't have a direct mandate to invest in startups, but you do bring a lot of capital into the market. So piggybacking on Mohandas Pai sir's point, how are you envisioning it? How are you practicing it? How is the money being deployed, or things that you can speak of on behalf of fund ecosystem?
No, thank you so much, Jitendra ji, and thank you so much, Mr. Pai. It's intimidating to walk big shoes, so I will I'll take it a bit slow. So NIF was set up by the government of India, anchored by the government of India, and its sole objective is to catalyze capital into sectors which are important for India. So if you look at infrastructure, there is a fund which we raised, which is called the Master Fund. The government is 49% of the fund. We've raised capital from global institutional investors. Multiple of the pension funds and endowment funds globally have invested in that fund. And now we are deploying from that fund. I am part of the second fund that NIF has floated, which is part of the fund of funds. We are a sector agnostic fund of fund focused on investing in private equity and venture capital in India. The third fund which we are raising currently is a strategic opportunities fund, which is a generic private equity fund. I'll stick to the fund of funds part, which I am representing at this point of time. Mr. Pai is very eloquently and beautifully put the challenges that are facing how to bring in domestic capital into India. The way NIF is structured is currently the way it works is that we want to catalyze global capital. That is our main focus at this point of time. But going forward, we do see the immense potential of bringing in domestic capital into the private equity and venture capital space into India. See, at the end of the day, all global institutions, all the pensions and all the other investors are made up of pools of capital from domestic investors, right? At the end of the day, there is a pensioner in the US, or there's a pensioner in Canada, there's a teacher in Canada, or there's a policeman in the US, whose money is getting aggregated to these global institutions. And these institutions are bringing this capital to India, to invest in India. So why can't your capital and my money, our taxpayers' money, we're all sitting here in this room, right? All of our money, all of us are contributing to our pensions there. Why can't an average Indian be exposed to the value that is being created in the VC space? That is my dream. Is there a way in which we can elegantly do that? And as we see, most of the people that we see is high risk. There is a very high risk in venture capital. Fixed income is low risk. So there is a kind of a risk reward classification that is there in people's minds. So the way we're thinking about it is that if you do your job right, if you're able to, you can lose money in fixed income, you can make money in venture capital. Skill lies in deciding which fund to back. The skill lies in deciding where you want to invest your capital. And that is a skill set that is being developed in India at this point of time. So there is a huge pool of capital that is available. There is a huge number of managers that are available in the market. How do you find an intermediate layer which can ensure that the capital that is raised is invested judiciously in a manager that knows what he's doing, has a good track record, is able to generate good returns, and has exhibited this demonstration of distributions or returns to investors successfully? And that is the only way you will be able to ensure that there is a consistent and sustainable flow of capital from the institutions to the ecosystem. Now, the skill in the middle layer is what is being developed at this point of time from NIF's perspective. So we have building a team which is focused on selecting the best available fund managers from the pool of managers that are available in the country, and ensuring that you fund them, you invest with them so that they can then subsequently make investments downstream, make them successful, and close the loop with the ultimate investor who's coming into the fund of funds. So ultimately, you don't want my capital or your capital to get lost. That is the worst possible outcome that one can face, right? That skill set is a bottleneck at this point of time. And that skill set is what NIF Fund of Funds wants to address. how do you build capacity at that skill set level so that you are able to pick and choose managers who are able to invest well, exit well, know when to take cash out of the table and return it to the investors, which can then go back to the investor. And that is when you create the flywheel. That is when you can create a sustainable system of investments. And that is what we are trying to build at this point of time. So when we look at managers, we look at their track record, we look at their strategy. You can create multiple strategies, ensuring that there is a very good diversification. You don't put all your eggs in one basket. You ensure that you are able to adequately identify, select, and back the managers who've done well, who will continue to do well, and you believe that they will be able to generate returns. Because at the end of the day, you're investing hard-earned money of people who've worked, right? I mean, it's a pension money at this point. That is sacred. You can't play with pension money. You have to invest properly. And that is the skill set that we bring to the table and we want to focus on and do it. I hope that answers your question.
No, it does. Thank you so much. If I were to translate, because I think Kripashankar gave us quite a detailed approach in terms of how the funding is deployed. And for our entrepreneurs' benefit, this is something that you need to learn is that you don't blanket reach out to every VC or every fund. The idea, everyone has a thesis, everyone has a mandate, everyone has a return expectation and a focus area, be it strategy, be it sector, be it stage, be it geography. So being a targeted approach will help you in terms of the right fund that you invest in, because ultimately fund of funds or any other capital that the VC is pooling, they have a fiduciary duty to their LPs to invest in the right way as per the mandate of the fund. Now, another point I think that was corollary raised here is there's always a leveraging effect of the money. Either the government money is being leveraged in these funds or it's the international money that is being leveraged. And I want to ask Anjani on this, since Gates Foundation does a lot of work in terms of social impact funding and startup initiatives in India as well. So when you guys are looking to do investments in India, be it for philanthropic reasons or strategic reasons, how do you actually look at these startups and these verticals?
Thanks, Jeet. Thanks for having me on the panel. And I also want to, thank the previous panel. I really enjoyed the discussion, and it's very, encouraging to see the support and energy from the government in bringing about some of these changes that Mr. Pai also talked about earlier. So to answer your question, one way we think about it is that when we look at the role of venture capital, technically venture capital is suitable for a fairly narrow band of technologies, given their financial incentives and structures. And they also operate with under a high level of uncertainty. As we all know, almost 50% of early stage startups usually fail, and most of the returns come from a very small number of startups that VC funds are investing in. And therefore, usually the uncertainty that comes from technology, regulatory, or market is what VC funds try to minimize. And there, I feel that there is a role for philanthropic capital, for foundations like ours, and for the government to step in and try to reduce some of that uncertainty. And one way to do that is by investing in early stage research and development. I think that's an area where, usually when it comes to long gestating sectors, say, for example, biotechnology, it's a much higher degree of risk for VC funds to support. And therefore, organizations like philanthropic funds or government have an important role to build that ecosystem. And one way to do that is to support the incubators in the country. A good example of that is for Venture Center in Pune. And that's an area where we are working with Atal Innovation Mission to build that ecosystem and essentially codify the processes and systems that any deep tech startup needs in order to validate and develop and commercialize their early stage technology so that it becomes ready for venture capital to then step in. And second area where I think, in organizations like philanthropic organizations or more risk, tolerant funds like public funds can play a role is also in providing opportunities for startups to expand into new markets. For an organization like ours, which works in several countries, India and several countries in Africa, we see huge potential for ideas and products which are being developed in India to be made available in other countries with similar demographics, similar socioeconomic status in Africa. And there's a pretty strong demand for these products as well. But there isn't a clear path that is available to startups in India on connecting and accessing these markets. And given the presence of organizations like ours and bilateral and multilateral relationships that governments have across different countries, I think creating those platforms that can facilitate expansion of these startups into new markets is another critical area of support that we think this source of capital can provide. Thanks.
Thank you, Anjani. So it works more like a glue from the outside in the sense is that it's a binding money that can come in, not necessarily looking by the same matrix that a typical pure play financial VC will look at in terms of a triple bottom line approach, be it societal impact, ecological impact, economic impact. So a philanthropic fund or a foundation has a lot more detail and deeper roots and meanings and matrix in terms of how they evaluate investment opportunities. Now, having heard from Mohandas Pai sir in terms of the government's roles, rules and regulations and practice and policies, and hearing from the fund of fund perspective and social impact fund perspective, I want to switch a little bit more to the corporate VC. Because corporate venture capital is also a very important player in terms of where the money can come for startups. A lot of corporates have strategic needs as well as CSR opportunities. So I would request Kirti to talk a little bit about how does a corporate VC look at a startup, or what is the ecosystem for a corporate VC and opportunities today?
Thanks, Jitendra, and thank you everybody for the opportunity here. Picking up on what everybody's already said, I just want to kick off by giving a small example. While most of the people here would be investing in a startup at the early stages until it goes into the teenage, it's at that point in time that the corporates kick in, and we tend to get married to the company for the rest of the life. So the perspective with which we look at making an investment is obviously going to be different to what a fund or a fund manager or somebody else is going to look at. We typically like to stay with the company for a longer duration of time. Our time limits typically tend to be 20, 25 years and on. Beyond IPO as well, we make an investment and then try to take the business global. Groups like ours who have a global presence already, we work in almost every continent on the planet. We also look for synergies with existing businesses and how can we help the business scale. For example, if we do a good amount of work in telecom, product manufacture, electronics manufacture. So we've been working with lots of companies in Europe and Russia, in India. We manufacture in India and we've been exporting. One of the very few people who actually makes the product in India and then exports it outside India in the defense space. So the perspective is very different. How we look at a company is very different from what a fund would look at. But having said that, it is always good to dovetail with an investment that is being made by a fund. For example, a very recent investment that we made an investment as a small syndicate with a group of investors in the electric mobility space and the battery manufacturing space. So there are multiple ways in which we look at it. One, from the corporate end in itself, existing business lines, is there a strategic tie-in? Can we go for the long haul? Can we stick with this company for the next 70 years, 100 years? We are a 120 plus year-old group, so we look for the long haul, number one. Second, what are areas of interest to us? Where do we think the world is heading? We are picking up a lot of investments in the ESG space. These days, we are investing in technologies which will further the ESG mandate that a lot of us as corporates and as individuals also have. So that's the perspective with which we are picking and choosing investments that we speak on a daily basis today.
Thank you, Kirti. So for a corporate, if we recap it, it's not necessarily the financial return that they're looking for. What they're looking for, and especially pertinent to for you guys, startups, is that the fitment. Is it fit with their strategy, their product portfolio? Because ultimately they're in the long haul. As Kirti mentioned, this is about a marriage, a long-term commitment to building that company organically for onboarding it into their own group. Now, if we switch from it to a very pure financial perspective, I would request Naidu sir to talk about, you have been beneficiary or you are part of the ecosystem where, you are talking to fund of funds. raising capital as your LPs, you are dealing with a lot of startups who are reaching out to you for funding. You have seen the ecosystem for VC funds, semi-registered funds grow exponentially in India in the last 5-6 years. So what's your take on the VC fund ecosystem in India today? And especially from the perspective of startups when they're reaching to the funds, how should they be looking at it?
Yeah, thanks, Jit, and thanks, MeitY Startup, for inviting me to this the panel. It's a very interesting the kind of work what the MeitY and all of you are doing as a team. It's a great, the benefit to the overall system. So let me limit myself to the what I call this as a seed capital and deep technology investment, which is at the initial level of any startup. When you look at this overall ecosystem, we know Mohan talked about a huge capital that is available, but all that capital is happening at a Series A and above. Many times, people are very, very difficult for them to raise the capital at the initial stage. That's what I experienced last 5 years after starting this startup exceed as a deep tech seed level fund. When we started, not many seed funds are there, and not many funds are looking at the deep technology. So we took that as a priority for the country, and I personally spent a lot of time, and my experience has been good. Why I would say the deep tech is the one which will provide an early exit, not like you need not wait for 6 years, 8 years to get an exit. And we have seen the exits as less than 18 months. There are two exits in less than 18 months and one exit in less than 24 months, right? And when you invest into the larger SaaS model or a B2C, I always believe that the government and the VCs can do lot more in what you call strengthening this bottom of the pyramid ecosystem for the startup ecosystem. That is, you've done a great job in terms of, the great job in terms of the incubators and an accelerator, but you need to move away from academic oriented accelerators and incubators. The country has spent a lot of money in academic oriented incubators and accelerators, and you need to move out and look at a corporate or practitioners, innovator, accelerators and incubators. We done that as a matter of small experiment and the global accelerator of innovation network, which is a not-for-profit entity, which I also run that, and we supported around 44 companies, and all the 44 companies have gone to the next level. I'm happy to say that we are not seeing any bad apple either in terms of our acceleration program or in terms of the startup exit. The reason why I'm telling this is, I think Mohan has mentioned many people stay away from investing at the seed level, investing into the deep tech. As long as you can create a process, it's a very, very prudent process. The funds have performed. I've not come across any fund in Bangalore who said that they lost the money. And they given back the money to the principals. They're raising the next fund, and including the Karnataka IT fund, which is called the Kitwan. Kitwan has been there for last 20 years in Bangalore, and it is focused on the seed level, and it is returned the money in excess of 18%, 19% IRR. Right? So people need not should go out of the phobia that you cannot invest into the deep technology, you cannot invest into the seed level. There is a risk in that. So I won't call that anymore as a risk capital, because the ecosystem has matured. What the government should do. Couple of things I wanted to suggest. Government could partner with the funds like us and funds. There are many funds. Number one, the Mohan talked about the Elevate. Our experience in the Elevate has been great in Karnataka. Karnataka government has this fantastic program called Elevate. It supported around 498, the startups with 125 crores investment. No other state has done that. Can the government of India think about creating a Bharat Elevate and create a corpus of 1,000 crores as a Bharat Elevate and focus on the deep technology at the seed level, give an initial flip. The investment is 30, 40 lakhs or 50 lakhs. It's a great, I think Samruddhi is coming from MeitY, which is focusing on software products, and our Startup India is coming out with another fund, but you need to create larger scale in that. That is the second point which I wanted to make. The third is at the seed level, sometimes entrepreneurs are giving away the precious equity for the sake of working capital. That's where the government should come forward and create a debt fund, or create at least a CGT SME scheme. The other day, our Minister for Commerce was here in Bangalore. I did suggest to them one trigger from the government of India can enable that CGT SME scheme to be available to the startups. There are 450 startup funds are there in the country, and all the registered SEBI alternative investment funds. If government can say that any company and any startup that is referred or that is registered with any of these AIFs, which is part of a 400, on an average, maybe 4,000 startups would be there, and give them the CGT SME scheme, which is 1 crore, 2 crore as a working capital. So that will change. A single trigger can change the perspective, showing that, around 4,000 crores capital can be made available for the working capital needs of these startups. So this is the second trigger I would suggest. The third is, Mohan talked about the fund of funds coming from SIDBI. It's a great story from the SIDBI. It has been effective. Electronic Development Fund has been effective, but you need to change the size of the corpus. And the SIDBI, over a period of time, it may be very difficult for funds to access that money. Probably government should look at that. How do you make SIDBI more a fund friendly? The policies that has. So there are a few things which we need to tweak, and if you tweak that, at least I'm confident that the deep technology which can make our country, Make in India program, Atmanirbhar program is a great success in our India, and we can create the fund products for not just for India, and we can use those products for the India market, for the global access. That is what innovation is the other thing what people talk about, that innovation. We have enough innovation. People are creating the innovation in the social sector, people are creating the products, and people are creating innovation in the business models. Even if you need to create the core R&D, probably you can outsource from other countries. Talk to Israel. Why Israel should go back to US for accessing the fund and then come back to India for accessing our markets. Israel and India should work together. Israeli innovation, India markets can make a difference to our country. And so the fund infrastructure at the seed level, and then the incubation and accelerator infrastructure at the bottom of the pyramid ecosystem needs to be strengthened. It's a great job done by the MeitY till now, but we need to scale it up. This is what I have few things to submit.
Thank you so much, Naidu sir. Your inputs are much valued and appreciated. Especially as you reference that currently Government of India, both at central level as well as at various state ministries as well, has launched multiple funds. Be it SIDBI Fund of Funds, Startup India has that seed fund scheme, MeitY has an electronic development fund, through which the focus has been to fund electronic and hardware-oriented startups at early stage, who don't get a lot of private sector funding given the gestation period and complexity of the time cycle. But aside from that, when we start looking at, we talk with the seed funding. So, in the analogy of a tree, so you are watering the seed at this stage, and corporates come when it's, a little older and a little stronger and can be absorbed into the corporate. VCs in the late stage VCs and PEs come when it can be scaled up significantly. But before the seeds are watered, right, there is the angels which actually invest in the dreams. So before the seed fund, there's the angel investors who, you have to sell your dream and your vision to them and help them bring that to life. So I want to talk to Mahavir, who's representing TAI. that as a angel investor or as an angel investor platform, how are you guys looking at it? How do you look at watering those dreams and identifying what can be actually nourished?
Thanks, Jeet, for having me here. And pleasure being here. And the audience is pretty young, and I think angel idea or early stage funding is far more important at this stage. And I think an organization, a nonprofit like TIE has multiple roles to play, and we are doing that. So while Mr. Pai was talking about Indian funds being invested in India, we launched the TIE India Angel Fund where all charter members across various chapters, 3,000 of us are now angel investing, and 50% are non-tech people. So there's money coming in from different walks of life, other places and entrepreneurs. So we're trying to bring mainstream money from within India into investment, and that's what's happening. Similarly, bottom of the pyramid, Mr. Naidu spoke about, about C.K. Prahlad, his House of TIE, the fact that we've always nurtured entrepreneurship at school level, college level, university level. The angel program also is working at an early and idea stage only. And it's not just investing in ideas and dreams, as you said, it's also hand-holding, it's also mentoring, because that's a very strong part that TIE has. And the biggest thing that we have because of our spread across the globe is access to market. If it's a TIE invested company and post POC, post revenue, they have to expand outside of their geography. I think there's no better, association or organization where TIE can help them. So it's multiple things that we actually take the seed into a situation where corporates or funds or PE, et cetera, can invest in. And ticket size is being very small, ticket size is being spread out, being agnostic, trying to work in biotech, in trying to work in various sectors where the gestation period could be very long. I think we are trying to strengthen startups at a very, very low level. And I think we are happy that we've started to do that. And we're just not the only ones. Other angel networks are doing something similar, and we are co-investing with other angel networks as we speak. So I think the future, before the funding goes to a larger organization or a corporate or a fund of funds, it's very important that they are investable at that stage. And I think that's where TIE Angels or angel investment always happens. We're always happy, and we have a platform. It's all online. There's, COVID has made us not have deal flows in person. Everything is happening on platform. So I think the scalability, the outreach, no dearth of funding coming in from within India and outside India, and being a non-profit where you're not charged exorbitant success fees or due diligence or charges. I think it makes it very, very democratic and very, very healthy from India's point of view, and TIE is happy to do that, and I'm happy to lead this initiative TIE was just launched this year. Thank you.
Thank you, Mahavir. Now, TIE with the global presence that it has, I think that the key point here was the market access that you guys can provide across the world, plus the expert mentoring from around the world, not just in India as well. So that can play a critical role, and I think every homegrown organization that can bring all the stakeholders together has an equally important role to play in terms of how do we support the youngsters and the entrepreneurs to realize their dreams. Now, moving on to the element of tier 2, tier 3, building the investor ecosystem in India, bringing more capital from central India and other parts of it, right outside of the metropolitan. So what is Let's Venture strategy, or how do you, Nakul, see in terms of how do we bring the awareness and the momentum in the hinterland or the heartland of India about the opportunity and the potential of early stage investing as an asset class?
Thanks, Jeet, for having me here. I think this is a very important part you've touched in terms of Bharat, people in the Bharat market now investing. So I'd like to quote about 3-4 major points. What has happened is, in my mind, we are in the 1983 situation, what 1983 did for Indian cricket. Zomato did for angel investing. Today, tech investment has become a mainstream, and many people are looking at investing across the country, be it in the metros and non-metros. We are a platform with about 11,000 angels on a platform, funded about $375 million of funding, which has gone through our platform. 1 of 4 companies which are DPIT registers have gone through our platform, either selected or rejected, a combination of both. What we are looking at doing is, and the number of people which is in the last 3-4 months, typically if I call it the Zomato moment, has literally gone 3 times. The number of new people we get on a form to register to become angels is gone up by 3 times. And out of this, 1 in 3, actually 1.5 in 3 are people from non-metros. And that is the opportunity which is there, where you have people from non-metros wanting to invest into startups, not only at the early stage, but late stage as well. A lot of the CXO community is looking at getting exposure onto investments, private equity investments. Typically, what has also happened is we've seen people who have a lot of money, have disposable money, want to invest, but don't know where to invest, how to invest. And through the Let's Venture Varsity program, we spend a lot of time with these investors to also educate them as to how they can deploy portfolio management theories so that they can invest into funds typically and make it long-term sustainable. What we've also been doing on the Let's Venture platform is that across a lot of these cities in India, we've been having these engagements with investors, educating them, because as you know, today we're in the private equity bubble, if I may say so. I don't know how long that's going to last, but what is important is if you have to maintain this ecosystem long term, there has to be sustainable money coming in. Yes, category B, category C cities providing that money are very important. What is also important, we need to educate our investors as well. I talked about, I think some of the speakers in this session and the earlier session talked about in terms of focus area on deep tech, health tech, and therefore we need angel investors who are part of that ecosystem, who've been there, done that in the health tech, ed tech, agri tech ecosystem, to be able to contribute actively, not only by capital, because I think the time has come where capital is abundantly available. Mr. Pai talked about over $30 billion of funding, which is going to go this year to startups, right? It has gone beyond that. It has gone about how can I as an angel investor come and help you as a startup? And that is critical. TAI is doing that, and many other organizations are doing that already very successfully as well. And that is in my mind, the critical differentiator, which we at Let's Venture platform offer, because what we created is something called the Founders First community, where existing founders are not only investing, but also helping startups on the age of not only raising money, but also on business mechanics, what to do, go-to-market strategies, going international, going domestic, and we also tying up with a lot of the business houses as well, so that especially in health tech, we've done some tie-ups as well to focus on health tech companies trying to go not only in India but abroad as well. So I think it's an end-to-end thing, and a lot of the angel investors' handholding is required, so we build sustainable capital. And what Mr. Pai also talked about, how government can be help create these circles of influence of angel investors pan-India, where they are able to successfully focus on industries and also to build a long-term capital through insurance sector opening up as well. I think that would be the most critical aspect to help long-term Ruby capital in the country.
Thank you, Nakul. So now that we have done first round of questions, and we have heard all the way from Mohandas Pai sir in terms of the large-scale transformation and policy frameworks that need to be refined to unleash the capital. And we have heard all the way down to how do we source capital as a new asset class from the heartland of India, from the small ticket investors, and all the way in the middle from the social impact and the VC perspective, as well as the corporate VC perspective. Given the paucity of time, I'll request if anyone has a question from the audience, we can take 1 or 2 questions. Yeah, sure, go ahead. The lady in the back, please. Yeah, do you have a mic?
Good afternoon, everyone. It's really nice seeing such a beautiful panel sitting here. I am a program manager of an incubation called Electripreneur Park, and we have around portfolio of 50 startups. They are from hardware background. My question is to everyone sitting in the panel is, when we approach to the investors or the venture capitals here, so they feel quite hesitant, to invest into hardware sort of startups instead of, they feel very confident in investing into the SaaS and software startups. So why is it so? Because they are doing very well for the market, and of course, take time to come into the market because they are developing a hardware for the market. But why is it so? Why this, a sort of partiality, I would say? They pay towards the software and the SaaS startup instead of the hardware electronics.
Thank you. Good question. I think I would request Mohandas Pai sir to answer this. Yeah.
Look, venture capitalists will invest in areas where they believe they'll make the maximum returns. It is a business. It is not a development activity. Let me be very clear. If you are an investor in a venture capital fund, you want maximum returns, right? And that's what they do. In their view, SaaS companies, digital companies give the maximum return. Now, India has to create a hardware ecosystem. There are many small hardware companies require capital. India is short of capital. That is why all of us are advocating, we need a hardware fund. Every state government should have a seed fund for hardware. They create jobs. They must trigger it. And when they come up to a certain level, other people will come and invest. I sympathize with you. I understand your problem. For the last 10 years, we've been saying we need more capital, we need more funds. This is a development activity. Like I said, if government spends 65 lakh crores in the budget, why can't they put 10,000 crores across India, center and the state government to develop this sector? We will create millions of jobs for the young people. This is a big tragedy in this country that we are not investing enough in innovation. So whichever state you are, you must go talk to the government and say, create a hardware fund. I would like MeitY to create a hardware fund like the PLI scheme. The PLI scheme is a fantastic scheme. Look at how good it is doing to India. Government is putting money on the table. Why can't we have a PLI-like scheme for hardware startups?
Sir, everybody's speechless here after listening to your talks.
No, I just like to, I don't know what kind of hardware, but to me, IoT devices, EV, all these are hardware. I mean, I don't understand are you talking about computers and laptops and phones? No, hardware has evolved from AR, VR machines to EV machines. I mean, I think you have to, I mean, if it's innovative hardware, why would we not invest? I mean, I don't see any reason for me not to invest.
No, but relatively, I think, relatively the investors are little stay away. That's what EDF was planning to, try to do something enabling some of the funds to invest into the hardware. But EDF could not invest all the money what has been sanctioned. They just invested probably 15% of the overall fund among the funds, So we need to enable. I do agree. I do sympathize what she said, but there the problem is a little different. We need to, solve this problem in two ways. Number one, the incubators should have a market access. The market access both in terms of the domestic market access as well as the international market access to test out the product. That's where the government could support. And number two is enable the EDF2 again. EDF fund 2 should come. Probably you should take it up internally.
Yes, sir. Your wish is my command. We'll take it up internally further. No, I mean, obviously, I think what Mahavir touched on is valid, but at the same time, that's a very small pocket of money. That's a very small pocket of money, and I think Naidu sir and Mohandas Pai sir point about the large intervention that is needed to actually make a dent. Otherwise, it's just a drop in the ocean that we're looking at. But to you, I'll say connect with Mahavir directly because he's, on the stage, he said it, that he's open to it. Any other question? Yeah, please, here. This is the row.
Thank you, sir. In US, the venture capital is also called vulture capital. I think you remember that very well.
That was in 80s. Yeah, that was in 80s. Yeah.
Fair enough. So, but I think, we are always time behind. So maybe it's applicable to India now. So, the point is that in the venture capital, you also take risk. I would like to ask Mr. Mohandas Pai and others, what kind of return you expect? Because you always take a risk. You do a market making where you lose money. Some you lose and some you gain. And the gain you get is much more than what you lose. So therefore, you have to take some risk. And the lady asked that very rightful question that in software, you are not investing in the hardware also. I don't think people are investing money because we are so poorly placed in the hardware sector. Therefore, I would like to learn how much risk, or are you taking risk, or are you risk averse? And to what extent you can take a risk in your investments? Thank you.
What makes you think you're not taking a risk? Have you put your money in venture capital? Have you put your money into startups? I put my money into 250 startups for the last 10 years. I put my money into 32 funds in this country. I've helped build the ecosystem. So I'm talking with I put my money where my mouth is. So we are taking a lot of risk. So we take the risk every single day.
So that is the question I'm asking, sir.
What risk you're
Mr.
taking?
Pai, I'm asking the same question precisely. What kind of risk percentage? You know,
every venture capitalist.
You can't shout me down, I think.
Every venture capitalist take risk, and they all take a risk. And you know, when you have 100 companies, maybe 25, 30 will fail. Maybe 25, 30 will return maybe 1x. Balance, 10% will return you 5x, 6x, you make your money. So there's a portfolio. There's a lot of risk that everybody takes. You cannot say, what risk do you take? Yeah. If it's so risk-free, all the banks will be investing in venture capital firms and not putting money into loans, right? It's a high-risk activity.
Yeah. So just to supplement what Mr. Mohandas Pai said, that VCs are not vulture capital, like, what you carry the perception, no way. And the VCs have enabled many of the startups. The reason why people talk about the startups in India, for India, the future is with the startups. And we, all the VCs, strongly believe in that. That's point number one. Point number two, when VCs take the risk, they take the calculated risk. Calculated risk in the sense, they put the money because it's a risk, but they also have the capability to monitor the company, to help the company to go to the next level. And the next level, when the company needs a new capital, they need to enable that. So VC's job is not just putting the money alone. Putting the money in is only one aspect of it. There is another 50% effort we need to put in to make that company successful. That's what India, that's what is the funds that have been operating in Bangalore and across the country, I've learned last 10 years, So that is the reason I said right now, the funds are very, very confident that they're not losing the money. And I've not come across any fund that lost the money.
Thank you, Naidu sir. And of course, Mohandas Pai sir, with your leadership and vision, we have built the ecosystem. The funny thing is, on this Azadi Ka Mahotsav that we are celebrating today, we are actually having a lively discussion on how can we invest more? We are not taking risk. 5-10 years ago, there was no discussion around that. Today, we have come that we have a sense of identity and entitlement that we want more. And I think it's thanks to your and the effort of the other folks who have been path blazers in this regard, that we have been able to get leaders from the whole value chain of funding. The angel investors, the angel platforms, the early stage VCs, the fund of fund, the venture funds, and you, sir, as well. So seeing that there's so much robustness in our ecosystem, so much is happening today, and going forward, as we look at, the 100 years, 2047, I mean, that's too far. As sir, you mentioned, next year itself we'll be hitting 100 unicorns probably. Yeah. So we are accelerating at a fast pace, and I mentioned this in the last panel as well. The destiny of a nation changes when we start celebrating our startups like our athletes. So today we are not talking about blockbuster hit movies, we are talking about unicorns every day. So I think there's a changing paradigm, changing momentum, and it's thanks to you, thanks to Naidu sir and others on this dais today that we are doing this. And I would request our startups to look at the future. And Pai sir, I would request you for 2 minutes of closing remarks. We have a lot of youngsters here. So enough of fun talk, maybe some aspiration and inspiration for them as they look to build their companies.
Thank you very much, folks. By 2025, India will have 200 unicorns, 100,000 startups, creating $1 trillion of value. There's a lot of investment that's going to happen. So I would urge all of you to work towards marketing your startups. Please remember one important thing. There is a market for startups. You have to go sell. You have to go market. You have to go pitch. You have to create enthusiasm. You have to tell people why they should invest in you. You have to convince people you're the hottest startup on the planet. And that is your job. Your job is not just to create technology. Creating technology in this country is the easier part because we have a lot of techies in this country, but we are short of capital. When capital is scarce, you have to go and pitch and you have to learn how to pitch. There are more than 675 AIFs today, and you see this huge amount of action. You can go to the Less Venture platform, which is a fantastic platform, and platforms like that, and put in pitch. You can go to many, many angels and talk to them. You have to do it. I know people who have gone to 150 investors and finally got money. You cannot give up because the future is very bright. The future is transformational. We are in the midst of digital revolution. 250 years ago, an event happened in Great Britain, which changed the world. That was the invention of the steam engine. Till then, India and China were the greatest economies in the world. Europe became the largest economy in the world because of the age of the machines. Now, 20 years ago, we had the internet coming in. We are in the midst of the digital revolution. Everything in the world is changing at the speed of light. In 2019, the world spent $2 trillion on digitization. This year, the world is spending $2.25 to $2.3 trillion. So the world has changed. Out of 7.8 billion people on the planet, 6 billion people have a digital phone. 5.5 billion people are on the internet. So when everybody's on the internet, they do business 24/7, synchronously, asynchronously. So there are going to be hardware devices. There are going to be IoT. There are going to be drones. There are going to be SaaS companies. There are going to be a tech company. They're going to be everything. And you're going to ask yourself why people are successful. Everybody started small. Narayana Murthy started Infosys in 1982 with 10,000 rupees. Today, Infosys is worth $100 billion. TCS started in a small way 10 years before that. Now they're worth $185 billion. So it takes time. It takes perseverance. Don't feel sorry for yourself. Nobody owes you a living. Nobody owes you anything. You have to go sell. You have to go market. You have to prove your point. You have to fight and you have to be successful. And you can be successful because the market is much bigger today than it was 10 years ago. The market will be much bigger in 5 years than it is today. Everything is expanding. Capital is also expanding. That's why we want more and more. A dil mange more. And you have to fight. You have to make the future. And you are the innovators. I'm sure all of you will succeed. Wish you all the best. And MeitY, I'm sure, will support you all the way. We have a good ministry in MeitY. They're all working for you. They will support you. Please remember, Prime Minister Modi gave the vision of Digital India in 2015. Who spoke about Digital India? Nobody spoke. From the Red Fort, he said, Digital India, Startup India, Stand Up India. Everybody used to laugh, ye kya hota hai? But it happened. Today, look at what we have done. We have come a long way. And we're going to go a long way. Write to the Prime Minister and tell him that you want more capital. Write to him and tell him you want more funds. I'm sure he'll reply to you. In the Mann Ki Baat, he will talk. You have a Prime Minister behind you. You have the minister like the IT Minister behind you. You have Piyush Goyal behind you. You have Nirmala Sitharaman, a Finance Minister. Write to them and tell them you want more money. It is your right. We have to invest in the youth. We have to invest in innovation. We have to invest in the future. And all of us are working to make you successful. There is not enough, but fight your way, you will succeed. And I look forward to all your success. Thank you very much.
Thank you, sir. Your aspirational words are always amazing. With this, I would like to thank all our panelists here today for making the time to be part of this gathering on a special occasion that MeitY is celebrating today. Now I would request Anna to take over, please.
Thank you so much. So again, gratitude to our panelists. I now request Honorable Joint Secretary, Shri Bhuvanesh Kumar, to please grace the dais and extend mementos to our panelists for panel 2. Welcome, sir. Thank you so much, sir. We are honored that you've come. Thank you, sir. A big thank you to the panelists again. I now request again Senior Director MeitY, Dr. A.K. Garg, to please grace the dais and give his concluding remarks to the audience.
Thank you, Tanya. Thank you once more for during this 3 hours of celebration that we had. The startups are not only the story of the future, but they are the celebrations for all of us who are actually have lived quite a considerable time of life, who have seen the pre-liberalized era, who have seen the challenges when the fiat used to actually be the driving force behind the wheels and the ambassadors. And we have come a long way where we see the country which is actually emerging to solve problems for the world. From a country which only had problems and no solutions to a country which is creating solutions for the world to this startup ecosystem that we have moved a long way forward. And we have the right set of now parameters that can actually change the discourse for the future. And that's what we need to actually have been deliberating for the last 3 years. We saw that how the various Government of India ministries, the Startup India program, have come together, and the startups have actually activated them to deliver. The government officers working hard to deliver was always a challenge. But my experience in dealing with the startups is that I feel enthused to even work on the weekends because you are in touch with the youth. You are in touch with what is tomorrow. Only the faculties and the teachers. And when I was with IIT Delhi, I always used to be very privileged to be part of the youth, but the startups have given everyone an opportunity to be the part of the youth. Mohandas Pai, why he's today here? He did phenomenally well with Infosys. B.V.R. Naidu, the creator of STPI. All these people, actually, I don't see them earning money or creating 10x or 12x, but they are actually part of the celebration of the Startup India program, and that's what we heard today. I see every corporate, when he saw that there is an end of the road on the pandemic, but only thing he was enthused about is that how can I get connected with the startup ecosystem so that I make myself more worthwhile. It's the same way that actually we have become more sensitive. We have become more, the life has become more meaningful. And when it gets connected with the startup, we get to understand that there is a connect between the meaning and the startup ecosystem. And this is very, very important. This is not only for creating wealth. I think this is a way that actually everyone is getting answers to various questions, which previously the Sadhgurus and the Ravi Shankars used to provide. Now the startups are providing it to us. And this 3 hours actually give all of us an opportunity to get more connected with them. Whatever the private sector and the public sector is doing has been actually discussed in this 3 hours. what we need to do as a aging generation is that how do we actually make them reach to the people who are, or the youth who are seekers for that. And that's the responsibility we all have in today's day. And we hope that we will be able to create a small difference to a large difference that they are creating to the world or the globe as such. Thank you once more for being here. Whatever has been discussed, whatever has been deliberated upon, we will try to take it forward. We also invite you to send your queries on the MeitY Startup Hub, that we want to see it as a platform that actually brings all of us together. And if you have any other queries, any other challenges, I'll request you to be actually come forward, provide them on India portal, provide them on the MSH portal. And I assure you, part of the Ministry of Electronics and IT and the Government of India, that we are eager to reach out to you. Thank you.
Thank you, respected sir. We now halt for a short tea break. Please be back in the next 20 minutes, requesting everybody to reassemble. Thank you so much.
Yeah, one quick request. I believe we're going to have a very exciting event after this. Startups will be awarded. Some of the really innovative startups have received significant awards, so they'll be recognized. So please stay back after the tea break to be part of that celebration.